Oh boy, here we go again. Back to work tonight, guys. Hope you had a fantastic Thursday. Hope you got some of those bear traps we talked about in last night's video. But it's Thursday night. We're getting ready for Friday, non-farm Friday, coming right around the corner. We got a bunch of news tomorrow morning, got a bunch of ranges on the charts in front of us here tonight. You know me, I love me some range-bound markets. Got a lot of great trades we're tracking for Friday. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to finish up the week firmly in the green. Before we jump in and get this party going tonight, as always, make sure you subscribe. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video, do me a favor, hit that like button for me. I appreciate you guys supporting this YouTube channel and tuning in here tonight. But enough of the intro, right? Let's get ready for Friday. Friday is right around the corner. Biggest news of the week, biggest news of the month. We've got a bunch of ranges in front of us. As you can see, everything's range bound, right? Everything's range bound. There must be some big news coming tomorrow. Ranges on the Nasdaq, range on the Emini, range on the oil. Anytime we see ranges, we're talking about breakouts, we're talking about fake out breakouts, we're talking about reversals. There are plenty of ways to make money on these charts, and I'm going to give you a great roadmap, a simple roadmap to make some of that money and put it in your account tomorrow morning. Now, speaking of tomorrow, before we jump in and take a look at each of these trades we're tracking for tomorrow, let's make sure we keep an eye on the schedule for tomorrow, because tomorrow is not your normal Friday. Tomorrow, of course, is the first Friday of the month of October, which means it is non-farm Friday. Biggest news of the month. And you could argue this is one of the biggest news reports of the rest of the year, because we know the Fed is watching this closely right now as far as their rate hike schedule. So tomorrow, kind of the key thing tomorrow will be, this is going to be one of those good news is bad news situations, which means if the number comes out higher than expected, I believe they're expecting 250,000 new jobs added, not in the month of October, but in the month of September. If they exceed that number, it will likely tell traders that the Fed is probably going to keep on aggressively hiking rates in the month of November. So good news is bad news is good news, right? So that's kind of the key component for this there tomorrow. Remember though, news is noise, so we're not trading the news, right? We're going to trade the reaction tomorrow morning, right? So news comes out at 8:30. Again, think about that. Bad news is good news. A low number probably means a good bullish reaction. A high number probably means a bearish reaction. We'll trade the reaction tomorrow morning after that news comes out. And then I've been talking about Fed speakers all week this week, and we didn't really worry about Fed speakers really until tomorrow, right? Tomorrow, we're going to hear from John Williams. We'll hear from Neil Kashkari. We'll hear from Raphael Bostic tomorrow. Those, of course, will provide some more feedback on what the markets are probably going to already be thinking once we know that number tomorrow. So 8:30 Eastern time, bad news is good news. Good news is bad news, right? That is what you want to have on your mind. News is noise. Wait for the news to come out. We'll see how the market reacts, and I'll give us a great game plan tonight as we go through all the charts here. That way, no matter what the reaction is, you'll have a plan of attack to follow to capitalize on it. So again, careful tomorrow morning around the news, and also too careful overnight. A lot of times the lead up into this non-farm Friday number, a lot of times markets do get pretty slow, pretty sloppy. Remember, trading is like riding a bicycle. It's a whole lot easier when it's moving. So if it's going slowly overnight, don't force it, right? Save your bullets for tomorrow morning after that news comes out. Now, back to our charts here. The money is on the charts, right? We don't trade the news. We trade the charts. We trade the reaction to that news. Now, whether you trade one of these markets or you trade all of these markets, make sure you watch all the way through to the end of this video here tonight, because I'm going to cover different trade ideas, different strategies, different advanced tactics as we go deeper into this video. And you know me, I try to wrap it all together, save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. So grab some questions in the comment section, take some screenshots, take some notes, and let's jump right in and let's get this party going here. We'll go Nasdaq, we'll go S&P, and we'll wrap things up here on the crude oil, the Texas T, the oil futures to finish up the video here for tonight. Over on the Nasdaq, this is a 4,000 tick chart, all the time frames in the upper left-hand corner. Be aware of that. Also, too, keep in mind the Nasdaq and the S&P, the SPY and the QQQs. they're all very similar right now. So whatever I say on the Nasdaq can be applied to the SPY or the QQ, right? So be aware, they're all very much interchangeable on that. Now, there are two, for the most part, two key insights here on the Nasdaq or the QQQ chart here for this evening. First one is a bear bias. Again, look at a 4-hour chart, look at a daily chart. It's tough to call this a bull market right now. It is a bear bias market, which means I definitely be looking for some short trades, and that really goes right along with the range, the second key insight, which is a range with failed rotation. What exactly does that mean? Well, we have a range today, and you'll notice that every time the market went below the trading range, markets love to rotate back and forth. The amount we go below the range is equal to the amount we go above the range, right? So that is what we call failed rotation. Every time the market went below, it struggled to rotate back higher. You'll notice, right, it's having no problem going above and below, but when it tries to go above that range, it stalls out. So failed rotation. This is a very heavy market, right? Boy, what a difference a day makes, by the way. Just 24 hours ago, I put my last video out and said, boy, the buyers have all the chips. The buyers had all the control last night, but look where we are now. It's difficult to find a good buying opportunity right now. The bears have momentum at their back. They got failed bullish rotation off the high. So really the key for tomorrow is, and obviously we got to wait for that news to come out tomorrow at 8:30 Eastern time. We'll know more about the good news, bad news, good news. But right now, though, bears have all the cards right now and looking to short at levels of resistance. Now, sellers, bears have a lot of options here at this point. The key in a range market is looking for shorts either on a breakout going lower, right? Either selling breakouts going lower or looking for shorts off resistance levels up above the top of the range. So tonight on the video, we'll talk about how to make money on the breakouts going lower. We'll also, of course, talk about how to make money on the pops going higher, because with the big news tomorrow morning, that definitely might be the case. So we want to make sure we're ready for them. As we go lower here in the Nasdaq right now, and this of course also applies to the S&P 500, we've got some big levels down here, right? You got the 11,366, 11,358 level here. Those are those big lows that we had back on Wednesday's trading session. So those are kind of the short-term objective right now. The key going lower, if there's one thing I want you to kind of keep in mind for tomorrow, the key going lower is going to be a technique that I call the pop and the pullback. And what that basically means is we're ultimately looking for a pop to kind of break free of this trading range right now, because ranges, of course, are magnets. I want to see that pop, but when it pops down like this, because of these support levels down here, we have to assume there'll be some buyers waiting down there. So I have to be very careful chasing the market as it goes lower. Think about it now. Pop and pull back, right? Find some larger levels coming down, and we're selling back from there. Pop down, get the breakout, pull back to get more sellers interested at a higher price, and look for shorts as we go. For the most part, there are two basic kind of pattern structures, maybe three you want to look for as we go lower. Let's talk about those now, and then again, later on in this video, we'll talk about as we go higher, because that is also a very likely scenario here as we get the big news for tomorrow. So pop and pullback. One thing you want to think about is as the market now rolls lower, right? All of that strength will tell us the sellers are going to be looking for a pullback and a retest of that low. Buyers can then come in and try to pick that bottom and go back higher. Right now, though, think about finding that channel, right? That larger channel coming down off the high, right? Give me that pop moving lower. Then ideally what I want to do here is I want to get that pullback, and on that pullback, ideally I want to go up, get above the moving average. This is the 21 moving average, right? Get above that 21 EMA, and just like back here, right? Get them trapped in, right? Get those buyers coming in, trying to be a buyer above the moving average, thinking they're going back into that range, and look for their stops, right? And use those stops as fuel, right? It's just like this one back here, right? That pop, that pullback, the buyers try and collapse back down. That same basic idea. So strong move down, breaks free of the range. We don't want to chase it as we go lower, because then we're selling too close to that support. But remember, all that bearish momentum coming down here, trend lines galore coming down overhead. Let's trap in some of these buyers, use their stops as fuel, and look for one of those failure into pullback combinations for a retest of that low, right? We call these failures, buyer failures above the moving average, and then looking for, once we break below the moving average, that first pullback for that retest, that pop and pullback. That's one of them that is very, very likely for tomorrow. Another one would be kind of a variation of this. It's the grinder, right? It's the grinder. Let's say, for example, we get the pop, but it's not that big, strong pop, right? And it begins to grind down, right? Grind down. That grinder is also a very good giveaway, because now we want to simply draw a trend line off that low, bring it up around those highs, and again, may not be as strong as a pop and pullback, right? But it's the same basic idea, right? We break free of that trading range, which is a magnet. Then let's get this thing again. We don't want to chase it down here because of that big low down there. Wait for that pop back up. Wait for the buyers to come in, wait for sellers to take some profit. Once they do, what I always tell my students is, on these grinders, is look for some prior swings, right? Look for some prior swing highs. Try to get above those prior swings, because that's where traps live. Get above the moving average, because that's where failures will come in, right? That's where failures will live. And then, of course, get below that moving average, or get below that moving average, and that's where pullbacks are, right? Traps, failures, pullbacks. These are all the same setups that we talk about in our free trading course, right? So trap above the high, failure off the moving average, and that pullback. And again, where do the bears want to go? They want to go back down to retest that low, right? That's their objective at that point. One more here, one more as we go. Let's say the news comes out really good tomorrow, right? Let's say the news comes out. Again, good news is bad news in the situation with the Fed right now. Let's say we're really, really good news tomorrow and the market completely falls apart, right? It completely runs lower there, right? Probably not going to happen overnight. It'll probably be after that news comes out. But now think about that big move down. What's the problem with that big move down? We don't want to sell low. We want to sell relatively high, right? We want to attract more bears into the market. The bears are not going to want to sell way down there. Major support down there, right? So at that point, think about that pop and that pullback again. What I want you to kind of keep in mind, though, is that when things get really crazy with these big moves, it's easy to throw your game plan out the window and kind of chase it going lower. Remember, though, if it really makes a big, big pop going lower, you're going to want to go out and start finding larger channels, right? Larger channels off those lows, and we'll know more for tomorrow. Wait for that pop up. Okay, and what I always tell you guys is, when somebody asks me, how deep of a pullback, how deep do we need to go? Again, there'll be a bigger channel up there somewhere. We'll find that bigger channel. But right when the market begins to accelerate and go higher, right when you start getting above that moving average and that little voice in your head says, oh my goodness, maybe this is a reversal. Right when that little voice in your head says this is a reversal, that's usually when we've pulled back far enough. Now, we're not going to take the trade long off this, because anytime we see a strong move in one direction, we expect a retest of that low. What we'll do is we'll trap in those inexperienced buyers who don't have the game plan planned ahead of time, like we're doing right now. Once those buyers get in, you know exactly where their stops are, and you can hit those stops for an easy winner going lower. Grab that quick profit target, add some more on the pullback, and we're going back to a retest of that low. Again, things like traps above prior swings, failures off the moving average, and pullback combinations. Now, I know a lot of you guys have learned these entry tactics. You know how to find the right channels. You know how to find the swings for traps. We cover all the stuff in the free trading course. And I'll tell you, you guys inspire me every single day by sending me screenshots of the money you're making with the free classes. But listen, if you're here for the first time today, if you haven't taken the free course, if you haven't learned all the entry tactics I'm talking about here right now, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, join the free class. The strategy that I teach in that free course will make it easy to know where the winners are each day. You'll know where the losses are so you can avoid them. Easy to find winners, easy to avoid losses. And most importantly, the strategy I teach in that class will give you a roadmap, a game plan to follow each day. It'll give you a ton of confidence. If you're missing too many good trades right now, or you're taking too many losses, take that free course. perfect for someone to make the jump into full-time trading. That way, the next time you get like a pop and a grind, you'll know how to find that channel. You'll know how to find the right swings to use, how to time the entry properly right off of that high. All right. Now, one last question here. One last question. Let's say we do get that nice strong run. We get that pop, that pullback, that failure, and we're back down to retest the low. Can I buy it at that point? I can, but I have to wait for evidence, right? So let's talk about that. As we go lower, we get that pullback, right? Bears come down, pullback, failure, back down to retest the low. Now remember, at that point, right? At that point, if it keeps going lower from there, we talked about those 4 breakout patterns earlier on this week, right? It was the 1, 2, 3 breakout, the pop and grind breakout, the 2 try breakout. I'm not going to go over all the breakout patterns again, but if you watch last night's video or any of the previous videos this week, remember those 4 breakout patterns going lower. However, if we don't get that breakout through those lows down there, then we start seeing the bears coming in and starting to show signs of exhaustion. Remember, professionals, the smart money, they want to sell high, right? They want to sell high, not just sell high, they want to sell at resistance. Anyone trying to sell at that double bottom down here is asking for trouble. At this point now, there's a big level of support down here. We've retested that low. Now we can begin to rope in some of the sellers and try to get that double bottom reversal. Bears try once, bears try twice. This is exactly where the 2 try rule needs to be used, because if you want to pick a bottom, if you want to call a reversal, you need 3 things. 1, a major turning point, like a double bottom like that. 2, you need signs of exhaustion. My way of looking at signs of exhaustion are the 2 try rule. Bears try once, bears try twice. Once you have signs of exhaustion, then you need some sort of juice. You need some sort of catalyst, something to give you an edge. Because right now, momentum is all for the bears, right? If I want to be a buyer, I need something that gives me an edge over those sellers, and there's nothing more effective than to run some stops, right? Running stops is the most effective edge you're ever going to get. So again, look at the scenario right now. We get that pop, we get that pullback, we retest the low. We don't get a breakout, right? We don't get one of those 4 breakouts we talked about throughout the whole week this week so far. We don't. We now see bears come in and they struggle. Remember, these are the weak hands. These are not the experienced traders. They're not, right? They're not flush with capital, right? They're small accounts, tight stops. They're not gonna be able to defend themselves at this point. This is exactly where the bears will try twice. I can look for those sellers now to get caught. I can run those stops and look for that blast going back up again. Now, what will probably happen in this situation is you'll probably see that double bottom reversal punch going higher, and then think about it. All of this level now, all that area now is resistance. We're still an overall bear market. So as the market now punches back up again, hopefully more buyers will come in here, try to buy this thing, and we can, again, same thing, pop and pull back, failure into pullback, back down again. That would be a very useful, potentially a very profitable scenario for tomorrow. It begins with that pop lower, free up some momentum, and then the pullback to retest that low. Do we break out through it? Breakout patterns, we talked about earlier. Do we see that signs of exhaustion and that failure? Once we get that failure, keep an eye on the underbelly of that trading range, the same range we outlined 24 hours ago, and then look for those buyers to get caught and use their stops right in your favor, and think about this now becoming one big range. Okay, that's a very simple game plan to keep in mind here for tomorrow. And again, it all begins with that pop going lower. Okay, now the one big thing I haven't talked about yet is what if we don't go lower, right? What if the market runs higher here? That's a very, very good question, and it's a very likely scenario for tomorrow, because again, we may easily see a bad news is good news situation. Let's go to the S&P here now. And let's talk about the scenario as we go higher. Just like on the NASDAQ or the QQQs, there are three key insights, but very similar, right, on the S&P. Let's talk about that. First of all, bear bias, right? Look at the daily chart, look at a 4-hour chart. being a seller is going to be the more reliable right now until something changes. And we'll talk about what that something might be here in a moment. The second clue here is a trading range. There's that trading range. And again, we know that ranges like to rotate. So the amount we go below the range is oftentimes the amount we go above the range. You'll notice they have no problem going above and below, but when it comes to going above, they're failing miserably, right? That's a very big clue. That's a very bearish clue. We have failed bullish rotation. It's even more pronounced on that Nasdaq chart. And then you've got really probably the most convincing part of this bearish bias right now is this very clear wedge. Now, wedges are very interesting clues because when they get narrower wedges, what I always tell my students is that wedges are tradable when they're wide. But once wedges become really tight like this, they almost become like one of those old jack-in-the-boxes, right? Back when I was a kid, right? And then bam, right? We oftentimes get one of those big breakouts once the wedge gets narrower because there simply isn't any money to make, not enough movement inside of that wedge. So the wedge, not only does it give us some good direction right now, but it really kind of gives us a bit of a ticking clock, right? A bit of a timer, if you will, right? Because once we get down around these areas here, we can expect that pullback, right? That blast going higher. And wouldn't these bears love to sink their teeth into some shorts above these highs, right? And the buyers, I mean, heck, we've been very bullish all week this week, right? I mean, we're, again, as of about, 12 hours ago, about 6 hours ago, this market still had a lot of bullishness in here. But again, right now, what a difference a day makes. Very difficult to find a good long trade right now because I do not want to buy that pullback, right? I am count me out on that pullback right there. No thanks. But if the buyers, if they can hold this, right? If they can pop up and hold this, okay. All right, I'm with you, buyers, right? The buyers have more space overhead, but I'll tell you, though, that's going to require a very convincing breakout pullback above those highs here. So we've already talked about the pop and pullback on the Nasdaq, right? So now we know kind of, right, if it does make that big move down, we're looking for those bigger channels. We're looking for that pop-up, right? This is the same basic idea as we just talked about on the Nasdaq. And again, if it really drops, right? If it really drops, think about a bigger channel coming off those highs. Wait for that deeper pullback. How deep? Right when that market feels like it's a reversal, trapping those buyers and right back down again, right, to retest, and then look for that double bottom reversal, and then think about that being one big trading range, right? Just we talked about on the Nasdaq. So very, very similar here on the S&P as the Nasdaq. Now, let's get serious, right? How do we make money going higher, right? That's the key here right now. So for the most part, there are three key areas where you want to be thinking about some shorts. One is the underbelly of the range. That's the most aggressive. Two is the top of the channel, right, above the high of the range. And three is way up top, right, way up top. Now, these may seem like all the same kind of game plan, but they're actually quite different. Well, not quite different. They're a little bit different, and for a very important reason. For example, let's say, for example, the market simply takes a move lower here overnight. That is a strong move down, a shallow pullback, a lower low. That opens up shorts above that high. So if we start to kind of grind down here right now, right, there will be sellers looking for shorts above that high. Now, this is not a very attractive area for shorts because we've got major support levels right below us. And we talk about this quite a bit on these videos. Whenever I'm trying to sell relatively low, the key is going to be traps. If you haven't heard that word enough from last night's video, the key is going to be traps. So what you want to do is if we do get, let's say the market now kind of punches lower a little bit here overnight and then pops up. What you want to do now is again, we're not going to get a lot of sellers who are going to be excited to trade there. Why? Because we're so far down, right? Range above us. This is not a very desirable place to be a seller. However, if I can get some buyers to come in and try to buy this thing going higher, now all of a sudden I can use their exits as fuel. remember, in certain situations, where we don't have a good risk-reward ratio or we don't have a good momentum, right? In this case, it's all about risk-reward. The risk-reward ratio is not very good down here, which means we're probably not going to be able to recruit a lot of sellers down here. So we need something to give us that catalyst. If I don't expect a lot of bears down here, I need to get some buyers trapped in. And this, of course, is where that trap number comes in, right? The trap word comes in. I want to see now, in order to get a trap, you've got to get 1, 2, and get a trap up here, right? Now, sometimes it happens like this, right? Sometimes it'll go lower, it'll push lower like that, and it comes right back up like this, right? But that's the key. On a shallow pullback, you always want traps. On a shallow pullback, always traps, because traps by definition are going to get you in at a higher price because we are selling so low in that situation. And the big thing is now all those buyers now, when they get that big juicy signal candle, and you'll learn all about signal candles in that free video course I mentioned earlier, but once the bears see that big red juicy candle, right, or the bulls, excuse me, they're not going to hang out very long. They're going to get the heck out of the way and the market will tumble back down to retest the low. So shallow pullback will be a trap. Now, as we go higher here, this is where the fun starts, right? This is where the good stuff is. This is what we hope for tomorrow, right? Either that or the big pop and pullback we mentioned earlier on the QQQs. Now, as we go higher here, the key is going to be, well, remember we always say, the two questions you always want to ask yourself: how's my location and how is my momentum? Location is great at that location, right? Because it's at resistance with an overall bear market and a range below us. Very good location for a short. What is the problem though? Momentum. Momentum is not going to be as easy at this point. And this is a very easy situation to anticipate, because anytime we have a trading range and we go underneath the range and then rotate back up, if you watch my newsletter a lot, you know how often I talk about these and how they oftentimes, that slingshot off the low will really punch this market higher. So the long story short is, we can't be I want to sell up here, but I can't be that aggressive. So as the market pops up, what I'm now going to do is I'm going to use something like this one, right? I'm going to use now what's called a 2-try failure. Now, we don't need a trap on this one. It would not hurt at all. But what we want to see is, I want to see buyers trying twice. Right? And the reason for twice is, and I'm telling you right now, I've learned this lesson so many times the hard way. If you try to get too aggressive selling off that high with that momentum swinging off that low, you'll get stopped out and then it will drop. So what I always do is, I always tell my students, whenever we're rotating off the low like that, let those buyers try a couple times. Then once they try twice, use their stop losses as the juice, sell right into those stops, and then don't forget, if the market then punches and runs lower, that's why I said this is where the fun is. Now, where do the bears want to go? They want to go back down and bury those lows. So now let's find a new entry. Let's go find a trend line off that low. Find a channel off that high. Drill down, find your faster time frame, find those swings, and repeat after me. First test is the best test. That could be a trap. It could be a failure. It could be a pullback combination, right? I'm not going to go over all those details right now, but I go into a lot of detail about those, and I provide probably hundreds of examples at this point of traps, failures, pullbacks as part of our free trading course. So this is a very likely sequence here for tomorrow. Now, again, if I could get a trap high on that 2-try failure, that'd be great. Not required though. Okay, not required. So deep pullback, a little bit too deep for an aggressive trade, trap them in, and then grab the short off that new channel. Now, the next one is if we really blast. Okay, if we really blast. This, in all reality, gives the sellers a great potential profit. But you know what I'm going to say. That momentum now is a big deal. Anytime we see a strong move in one direction, we expect what? We expect a 2-legged pullback and a retest of that level. Okay, remember, there's a big difference between a rotation off the low, 1, 2 back down, and a just straight blast, right? Which could easily happen if we get some bad news tomorrow, right? Bad news is good news. So, kind of the third scenario right now for the bears, and then we'll talk about the buy side here going higher as well. The third scenario here now would be if we do just rip and run higher. there are two scenarios you want to look for to sell this thing. One is going to be a crown reversal. Okay, crown reversal basically means buyers try once, buyers try twice, and before we retest the high, we trap high above that first high, right? Trap high, nice strong signal, closing below the moving average, and we look for that short back down into that trading range. This could be a very, very good trade for us tomorrow. Remember, you want that trap. Okay, this is a very specific pattern setup, and I use it for a reason. It will keep you out of trouble trying to pick tops and bottoms. The big issue on this is it's a great location to short. Range below us, major resistance. The issue is that momentum. That's the issue. Now, want to make it easier? Here's the easier one. We run up, strong move higher. The buyers come in. Anytime we see a strong move, the buyers want to what? They want to buy the pullback and retest the high. What do we always say? Mission accomplished. Now, the buyers got what they want. The smart money got in here. Well, maybe not that smart. I don't like that pullback at all myself personally. But you know what I mean, right? Buyers come in. They take their profit at the high. Now we get all the rookies, right? Now all the new traders they haven't quite watched these videos yet. Now they come in, right? And they're starting to get in. Remember, if you want to pick a top and a bottom, you need what? Three things. A major turning point. You need a sign of exhaustion, the 2-try rule, and you need to run some stops because you're not going to have a lot of bears up there. You need some sort of catalyst, give you that juice. These are a much easier trade because now they've already got the retest, right? They've already accomplished their mission. The buyers got paid. Now the bears can get paid by roping in some of the weekends and look for that short off the high, right? Once you get that nice strong signal, then remember, this is where the party begins, right? This is where you should be getting very excited at this point, right? At this point, whether or not you took that short or not, when the market collapses off that double top like that, yeah, I always kind of perk up in my trade room because mark that low, mark that high, find those prior swings, get above prior swings. That's where traps live. Get above the moving average. That's where failures live, right? You get the point, right? We're selling off that high. And again, where does this thing want to go? It's going to want to go all the way back down to retest the low. That is about as good as you could get as far as the move going higher for tomorrow to be a seller. Now, how do we buy this thing? That's the hard part. The hard part right now is we have a big bear bias. We have not only a major top right there, right? This is the major top right here. But remember, both the S&P and the QQQs, right? The Nasdaq, they've got these big lows back here, right? If you were to ask me where a good place to sell this thing short would be, it is right at that area, right? This is a prior range, and and we talked about this already, right? We talked about how ranges, they love to break out and then pull back right to the underbelly of those ranges, right, and keep going. So that is that area right there, right? And we have yet to come back there. So this whole range right there, and you'll see this again, this is also in the Nasdaq as well. The Nasdaq also has that same spot overhead, right? The Nasdaq is up there 11,800. Okay, so this is a very, very difficult spot as we go higher to want to buy into up here. You've got trustable trend lines overhead, very difficult to want to buy into that. Now, where I'm getting at with this is, if we do want to buy this, we're going to have to get literally up around these highs. The buyers are going to have to hold this pullback, and they're going to have to make it undisputable, right? They're going to have to make it so obvious, right? It'll have to be, again, this will probably be on the back of some very, very low non-farm number tomorrow. Something will happen. The number will be horrible. The markets will love it, thinking the Fed's not going to raise rates anymore, right? Whatever. And it's going to require a very, very big breakout that holds that high. So imagine now, right? We go up, big, strong run higher. Again, that crown reversal, right, and back down, or that double top and back down is still the best trade. However, if they can pop up, if they can hold that pullback, and if we can get a very strong blast going higher, this is one of those 4 breakout patterns that we talked about in last night's video, really all week so far this week. We've been talking about those. If I can get that 1-2 blast and really hold that pullback. Remember, didn't do it here, right? We need to hold that pullback. I'm not buying that pullback, right? Not a good trade there. Not a very reliable spot for it. Not an overall bear bias. If they can hold that pullback though, then we go out, we find that new channel at the high, right? We mark off those channels. Again, whenever we have a strong move like this, we're expecting what? A retest of that high. Look for that first test off that channel. Look for that retest of that high. And I'll bet at that point, I'll bet you'll see bears come in and attack this thing. 1, 2, and back down from there. So if we do see enough strength and that strength can hold, I am open-minded to buyers up here, but they really got to show us something good. It's really going to be not just a strong move up, but they have to hold that strong move up, because we've seen a hell of a lot of strong moves this week and they can't go anywhere with it, right? So be very careful buying this thing as it goes higher, right? It's either fading off that high back down again, or it's that pop and that pullback for that retest. That's the game plan on the S&P, the Nasdaq, the SPY, and the QQQs. Let's wrap it tonight on the crude oil. Oil, of course. Oil definitely is bullish right now. Definitely bullish. But I'll tell you right now, the buyers have to show up tomorrow. I would say after a 2 million barrel per day rate cut yesterday morning, this is a very dull reaction to that announcement yesterday. That should be very, very concerning to OPEC right now, because unless these buyers, unless they can get something going here, I would imagine bears are going to try to attack this thing going forward. And there's some reasons behind this. This is not just my own opinion. You'll see here in a second. Now, first of all, we do have a bull bias right now overall. You know, look at a 4-hour chart. A 4-hour chart's a good example. Buyers have that big rip off the low. They're going to want to retest that high, right? So if you look at a 4-hour chart right now, that's strong run higher. You know the buyers have a little bit of the edge right now. And again, that OPEC announcement yesterday certainly didn't hurt, right? Next up here is a trading range. It's not just today's range, it's a multi-day trading range. Now, why is it important? Well, because we know that ranges act like magnets. We also know the amount we go below a trading range is oftentimes equal to the amount we go above the range. That is one of the major resistance levels that we're dealing with right now. So we're definitely bullish, but we're at major resistance with a range magnet underneath. And it's not just that pendulum swing resistance. It's also, we talk about measured moves quite a bit on this video newsletter. We talk about the first leg and the third leg, right? A classic 1, 2, 3 move, a classic buyer channel, and buyers coming in. This is a measured move. Okay, we have a lot of resistance, measured move resistance. There's more. You can go back. Look at your range right here. Okay, one of my favorite levels of support and resistance in ranges are triangles. It is not easy, it's not difficult, I should say, to see that triangle top, that triangle bottom. Right now, we've rotated back and forth, and we're right up at that triangle resistance. And no, I'm not done yet. We have more than that as well. This 89.05 level is a major top here overhead, right? It's a major top. Go look at a 4-hour chart right now on oil, and you will see it's not just that top. There's one more over here too, about around that 90. So major tops are overhead. Now again, the buyers have control, right? The buyers clearly have control of this market right now. But unless they can get some breakouts going on right now, there's no reason to think the bears won't come in and now begin to short this thing. Now, let's talk about this now. Now that we know the game, or now that we know what's going on, right? Now that you know what's going on, what's going through my crazy mind tonight, right? Buyers have control. We just talked about this, right? We just talked about this over on the S&P chart. What is my biggest problem right now? It is momentum. Momentum is the problem. It's a great location for a short, but momentum is the issue. Now, we have a bull bias overall, and fundamentally, OPEC is doing a good job of keeping these prices propped up. So I got to be a little bit careful on the short side. What I want to see is I want to use that 2-try rule. As momentum rotates off that low, moving average comes up. Now remember, in a normal situation, I would probably try to go 1, 2, and just sell into stop losses, right? But this is not your normal situation. This is a bullish overall bias. So I need some more firepower, right? I need some more juice going lower. And that's exactly where a crown reversal comes in, right? This is where now buyers once, buyers twice get that trap overhead. That trap overhead will be a fantastic way to short this thing off the high. Or let's say we do pop up, they retest that high. Now we're good to go. Now we can go out, get the buyers once, get the buyers twice, and look for that short back down. We just talked about this on the S&P, right? So again, before they retest that high, I look for the 1-2 trap and back down. Once they retest the high, then I've got the 1, the 2 as they get caught buying into those highs, and I can sell into stop losses. As the market goes lower, now the fun begins. We draw a trend line off that low. We find our channel off that high, and we short that first test. Again, I'm simplifying this pretty dramatically right now to keep the video short, right? You'll learn more about the entry patterns, right? The traps, the failures inside that free trading course. Where does the market want to go at that point? It wants to bury those lows on the opposite side of this trading range. That's the way you want to short this thing as we go higher. Let's say, for example, though, we V-top. We pop up, we run lower, we chop and go lower. We know this already, right? Where do the bears want to go? They want to rotate back and forth, right? Where's my channel now? Off that low, off that high. That's an easy one, right? That's an easy one. Get that trap, get that failure, get that pullback back down again. So if we don't see any of the 2 try failures and the market simply V-tops and begins to grind down like that, don't chase it. Wait for that pop up and short that first test off that channel. That will be a very good way to short this thing going lower. And then, of course, right, we know it is an overall bull bias right now. If we were to pop up, take out this area, hold the pullback, and get what? And get a blast, right? Needs to really blast, go through this area here. It needs to be a strong enough blast going higher to give me reason, to give me confidence that the buyers will come back and want to retest that high. Right? It'll have to be a lot stronger than this, put it that way, right? It'll be a lot stronger than that one. So again, it will pull back to the moving average, pop up, pull back, and blast. As it blasts, we find a new channel off that high, off that low. We drill down, and we're looking for that entry, that first test off that channel. It could be any of the entry patterns we talk about in our free video classes. And then, of course, don't forget the pop and grind. The pop and grind is also possible. We pop up, the market grinds and goes higher. This will probably be in combination with some other news event. You know, something else will happen overnight. Something happens in Ukraine. Something comes out of OPEC, right? Something is affecting this market at that point. It pops, it grinds. We find those channels off the high. We find that big channel low. We don't chase the market higher, right? We wait for the price to pull back. We wait for bears to get fooled into thinking this is a reversal. Anytime we have a lot of strength in one direction, we expect that retest of the high. We trap in bears on that pop and pull back and look for that retest. Once they get that retest, bingo, now it's 1, 2, short back down and take out those lows into a new trading range. We've talked a lot about those scenarios here throughout this video and, of course, throughout the week here this week. So not a lot changes there. Those 4 different breakout patterns we've covered so much here. Last thing here on the oil, if we get that short, right, or I should say, if we get that market back down to these lows, be very careful buying down here because, as I mentioned before, when the market rotates from one extreme to the next, what's going to happen? It's going to want to retest that low. Right? So let it retest, and then it's the 1, 2 back up again, right? So be very careful stepping in front of that freight train. Okay, there's a very big difference between this breakout right there and this one that comes all the way back down, right? That's a freight train right there. At that point, bears will be coming out, finding new channels, looking for those failures and retest that low, right? That's a better trade at that point because of that momentum. Now, it doesn't mean the bears will keep it going forever, but it definitely means that you got to respect that overall momentum as it turns before you then look for those sellers getting trapped into the lows and then buy back up again. Make sense? All right, hopefully that's given some light bulbs. If you're liking the video right now, give me a hell yeah in the comment section below. I always want to know who's watching these videos all the way to the end. Guys, wrapping things up here for tonight. The game plan is it's relatively simple for tomorrow. The big variable, obviously, is that big news report, that non-farm payrolls. So the game plan is put together. Tomorrow morning, we trade the plan together in our trade room. We open up 8 o'clock Eastern time every morning. I would love to to have you there trading right along with me. If you're missing too many good trades, if you're taking too many losses, if you're making too many stupid mental mistakes right now, come out and join me. Come trade along with us every morning in our trade room. I have the whole entire system laid out for you. All I need is you to put a little bit of effort in and come in and do it with me. I'll put all the membership links. I'll put the free class links in the description of the YouTube video. I would definitely recommend start first with the free course, learn the basics, and that way you're ready to go with me soon as a student and a member of our trade room. The easiest way to get information is to call or use live chat. It's always the easiest way to get information. Call, email, use live chat. I do check the comments below, not as fast as I'd like to. I'm a busy person, right, each week. So drop some questions if you want in the comment section. I'll get to them as soon as possible as well. All right, guys, I'm going to wrap things up here for now. Have a fantastic rest of your evening. Get some rest. Busy day tomorrow. And don't forget, Monday is a holiday. We'll come back on Tuesday after Columbus Day. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.